Tonight we're going to talk about the week so far and how I've executed. It's been a good week so far. I'm 3 for 3 in the Bund. I'm 4.46R up there, and I'm 2 for 3 on the swing strategy, 2.35 up on the swing, and it's only Tuesday. So if that doesn't deserve a little glass of whiskey, I don't know what does. We'll start out by covering the Bund from yesterday and today, and then we will move on to the 3 trades I've had so far in the swing strategy, 2 of which were in the euro dollar, and 1 of which was, of course, in the dollar Canadian. So, Bund first. Now, I'm going to have to put this Bund on market replay because I was looking at this earlier and thinking about how I was going to explain the trades, and I can't see how you will possibly work out what the fuck was going on if I don't show you how it looked at the time. But I'll do that, and I'll try my best to relay what was going on in my head as each trade set up. So there's a lot of levels on this chart, but I'm going to take it back to here so you can see what it looked like as we came into Monday in the Bunds. Now, I was neutral coming into Monday. This candle, as it looked here, gave me really no information on where this was going to go. So, as usual, in this type of situation, rather than trying to preempt where it's going, I'll just react to where it goes. So, I'll have key levels that I'm watching, and I'll try to get onto trades looking for rotations away from those levels if those levels are hit. Now, with that in mind, there was really 2 key levels. There was this one, which I've labelled KPI, key point of interest. It's the last high pre-break, and that was sitting underneath a daily swing low. So I did have my eye on that. But the bigger, more obvious level was this one to the upside, which I've again annotated as KPI loss, which is an awful acronym, but it stands for low of shooting star. I really should do better than that though, because loss sounds fucking terrible. Anyway, you know what I'm talking about. So it's the low of the shooting star, so I have my eye on that. Now, if we move down to the hourly, I do believe that we've discussed this already, but I don't know which session it was in. But we talked about this ahead of time, and I said that there was a level here, and we could look for a sell-off if Bund got up there, but I wouldn't be selling it blind. And the reason that I wouldn't be selling it blind is because there was no clear level on the 5-minute that was naked. John Ratchford, boss, bottom of shooting star. That is fucking amazing. Boss. We're changing loss to boss. Anyway, sorry, I shouldn't look at the questions while I'm talking. So I want to draw your attention to this high here, which I'm going to put in yellow. And I was saying in this previous session, come down to the 5-minute and look at what's going on up at the KPI, and you can see that there is no level of overhead lows that has been untested. These are the lows just beyond the level, and they were tested on this candle here. So I didn't want to go in and engage there blind, and I was also concerned that you have got this 63s swing high on the hourly as the FTA. So, you know, even if you were thinking, well, why not come down to this low of this candle at 67s, you're basically trading right into the FTA. So what I said I was going to look to do is see if we tagged the KPI, so tagged the low of the shooting star on the daily, got back below the 63s, and then I would look for a short. And that was how I presented it at the time, but since then the market's moved on, and you'll see that there is another issue that comes in here. So I'm going to step forward on the 5-minute, and I'm going to show you what happens. This occurs. Now, here's an interesting SFP on the 5-minute time frame. It is SFP'd this high, and is also turned just ahead of ATR. You might think, isn't that a great short? This wasn't a play for me, because when the 5-minute closed, it was still above this swing point, and I was a little concerned that it might get picked up there. In a strong trend day, pullbacks can be very, very shallow. So it's easy when you see that it's come right back down through there to think, well, you could have sold it. But, you know, imagine when it looked essentially just like that. I was concerned about this high, and that's why I didn't play this. I really didn't think that at that point, even though it was likely that some longs were trapped through this high up here and shorts had probably puked, that I really had the market by the balls. And now you might get a little inkling of how picky I am. It literally has to look damn perfect for me, with no reasons not to like it, for me to engage. So I didn't trade this. And then we start to move higher. Now, we're still looking at this KPI, but what I want to draw your attention to now is you see this swing point on the chart here. I have marked out a zone on this daily time frame that encompasses this pullback low from the 12th of September and this daily high from the Friday. And that was a zone that I thought price could easily get picked up at on the downside. So now the issue with potentially trying to get short underneath the 63s after it's hit the KPI is that you'll have this area and we might not be able to get back through it. So that was very, very concerning to me. If we step forward, you will see that it trades right up into that KPI. It goes through it. That's fine because we weren't planning to short there. But when it does come back down through the 63s here, again, this is why I was a little concerned and didn't want to sell, because I was thinking it's now hit into this zone and it could easily rotate higher from here. There just isn't enough room before that key area. So the plan that was originally made just really didn't stand anymore because of the structure that was created after we made the plan in terms of Friday's high. Hopefully that is fairly clear. So let's continue stepping forwards. And what you want to note here is the interplay between the levels. Note how it comes into this higher time frame zone and then rotates from there back to the KPI, which we know is a key level, and then begins to rotate again back down to the zone. So the market is reacting to the levels, but the zone is holding as support and the shooting star low is holding as resistance. And in a situation like that, what I'm now looking for is seeing that price is kind of between a rock and a hard place, which way it's going to break out of this area in order to potentially try and get on board. But you can see that we've already hit upside ATR, so I'm not keen on the long side. So as the day progresses, we move back into the low end of this zone, and I'm watching it very closely here, and then we make this low. So we just pop outside that zone, make a low. At that point there, I'm watching it but still not interested in engaging. That is the point at which I now decided to engage. When we broke this low and we were now moving out of the range and trending lower, to me that looked like the sellers had won over and that price was now going to auction lower to test the resolve of sellers underneath this pullback low here. So again, I wasn't looking for a huge move. I was just looking for it to move back to this low, and this is where I made my first attempt on the day to get short. And I set the trade up like this. I offered it at this low here. I didn't want to use a stop obviously that tight. I mean, that's ridiculous 2-tick stop and would stop me right out into the zone. So I went back and I looked at this candle that closed through these support lows, and I put my stop 1 tick above that, so I was nicely outside of the zone. And that gave me a stop at 61s, which I'm just going to put in. The target was 1 tick beneath this low right here, and that low was at 42s, so I have my target at 41s. And I set the trade up like that, went offered with the stop and target in, and waited to see what would happen. Now again, the rationale behind this trade is that we are coming off a higher time frame level. That KPI, the low of the shooting star, is very important on the daily. But look how patient I've been in framing the entry here. I've waited for it to get back down below the 63s. I've then seen this level here and waited to see what it did there. I've seen it rotate between this higher time frame zone and the low of the shooting star. And then I've seen it break down from there and lose that area. And still I'm not looking for a massive move. I'm just looking for it to auction down a tick below this pullback low and then get out and reassess. This was the next candle. It hasn't filled me. And then here I got filled. Now I didn't read too much into that candle. It is a small shooting star on the 5 minute, but I didn't read too much into it. I didn't move my stop or anything at that point, but I liked the look of that reaction. I hated the look of that. How things can change in 5 minutes. You get short here and it's like, oh, that looks like it's going to go. And then 5 minutes later it's like, oh, fuck me, it's back within that zone. But I knew I had a stop that was protected, so I waited to see what was going to happen. That was the next candle. Now that obviously looks very, very good at that point. So immediately what I did is I took the stop and I moved it a tick above that high. Now there is a process in doing that, and the process is I'm waiting for the market to move to a new low with a thrust candle, and if it does that, then I can move the stop beyond that high. So it's still the thrust candle approach. Next candle's that, and I thought this is definitely going to get to target here. Then it starts to rotate back on me. Now what I want you to note here, which is interesting, is that despite on the close of this candle being 8 ticks on side, I am still prepared to take a loss because I went in at 53s, and at this point in the trade I had a stop at 56s. So I was still prepared after being 8 ticks on side to take a 3-tick loss. And that's okay. I'm not thinking about the P&L. I'm concerned about what price is actually doing. I know many of you would not be prepared to see it get close enough to target like that and then take a loss, and you'd move to break even, wouldn't you? So what we're going to do is we're going to draw the break even entry, and we're going to write in massive fucking letters break even. There we go. Let's step forward and see what happens. Looks a little bit better here. Still not at target though. Fuck me, it's only taken out the break-even stops. It's almost certainly going to take out my stop, right? Then we get this. So there's a small interplay between these lows over here and these highs. I don't know how clearly you can see that. There's like a very mini level on the 5 minute right here that price is just rotating around. So after seeing it come all the way back to entry and put me offside and come literally 1 tick from my stop, I saw it start to react here. I still didn't move my stop, but I thought, well, this isn't looking great, but it is still clearly finding resistance in this zone. Then the next candle was that. Now at that point, I moved the stop down to just above that high. It's not going to let me do it with this tool now, but the stop came just above that high at 52s. So that high was 51s, my stop went to 52s. Then we got this, and now we are 2 ticks from target. Now I want to stop it there and say that on the close of this candle, even though it was 2 ticks from target, I am still prepared to see it come back from 43s to 52s, which is 9 ticks. So essentially I'm risking a 9 tick pullback to make 2. Is that smart? Well, it's just over a 0.2R at this point, and that is right smack bang on the threshold for when I just force myself out of the market. I have a rule that I've kept to all these years, which is if the evolving R drops below 0.2, no matter what things look like, I'm going to get myself out of the trade. And at this point, risking a 9-tick pullback for 2, it was a 0.22R. Technically, I didn't have to, and it really came down to conviction, because I was absolutely certain here that it wasn't going to stop smack bang on that low. So yes, from an evolving R perspective, it was right on where I needed to get out, but that is why I decided to hold this. So I do have a rule: as soon as it dips below 0.2R, I'm gone. So next candle. Now, when I saw that, you can guess what I was thinking. I thought, oh, fuck me, I should have got out down there. I know what you're thinking, because we all think it. Doesn't matter how fucking long you've been doing this, you are going to have those thoughts go through your head. So on the close of this candle, I'm like, right, that's definitely hitting target. Job done. Yes, it's only a 0.22R, but that's absolutely fine. I've got to stop out the way of this 5-minute structure. That's going to hit target, no problems. And then 5 fucking minutes later, I'm like, I should have got out down there. But let's step forward. We get this, and then we get that, and then we get that. So I was filled on that trade and got out of it. And probably the most important thing to say about this trade is look at the break-even stop. If you move your stop to break-even, you end up taking nothing and missing the winning trade. And I really want to labour that point. I have found over the years that you do not want to move to break-even. You want to trade the price structure. So it was a decent win to start the week. And the next trade came very, very quickly. I'll take the old trade off the screen so we don't have too many fucking boxes and levels all over this thing. As we moved up here and we cleared the zone from beneath, I decided to be a buyer this time. So I've switched now from bearish to bullish based on how we've reacted with this zone. And I came in here immediately flipping to long with a bid here, a stop 1 tick underneath this thrust candle. So the low of that was 49s, I had a stop at 48s, and I put a target of 1 tick through this high, which was 63s. So again, I'm not looking for a big target at all. I was playing the trade out exactly like that, seeing this thrust up through the higher time frame zone and thinking a quick pullback to here, and then a move up to test this old 63s level and just beyond it. So I set this up like that, and I got filled on the very next candle and immediately went offside as well, and the next 5-minute candle closed through my entry. Now for those saying, wait a minute, wait just a fucking minute, you don't trade immediate retests. I do in bunds on the 5-minute. I never ever do on my swing strategy. Now I'm not going to go into the reasons why tonight, but I do trade immediate retests on the bund on the 5-minute strategy, never on the hourly. So I took this trade here and again immediately went offside, and it closed slightly through where I entered. Now this trade was technically good, but it was very bold because it came very close to the flash PMI number. In fact, I was entering only a few minutes before. I fancied it. I was willing to wear it if I was wrong. You will see from the next reaction why it's not always a good idea to enter on news unless you are very sure of what you're doing, because although this was a winning trade, look at the increase in volatility. So it spiked up, filled me, took me out, and then absolutely tanked. So the second trade was a 9-tick winner, a 1.29R. Then we started to move down from here quite aggressively, which brings me on to my third and final trade in bunds on this day. Now this was a very, very good level. What you can see is the purple line that's been drawn on my chart is the previous week's VPOC. The VPOC is the volume point of control, so it's the price that traded the most volume on the prior week, and you often find a level like that can stop price in its tracks. So I knew that the VPOC was coming in at 28s, and I also knew that the prior day's volume value area high was coming in at the same price. And again, let me just bring that onto the screen, which is a daily profile. It's there. Remember, this is today, this is Tuesday. You're getting two profiles, a time and a volume profile for each day. So this was the Monday that we're talking about. So the prior day's volume value area high was 28s. So I knew that was going to be a huge level. Now, if you don't have market profile, obviously you wouldn't know that. But having said that, if you switch it to an hourly chart, you're going to see this swing high, and you're going to know that around those 31s, price could potentially get a bid. Although the actual level in terms of market profile that I was looking at was 28s, you know that there's this high at 31s, and you know the very last high here, the last bit of rejection that came in before price broke up and out, was actually at 26s. So you've got to keep your eyes on a level like that. So I was watching this area, but what I was thinking is, in terms of a rotation to the upside, how am I going to trade that? Where is the clear high that I can key off that hasn't been tested post-break? And where is a thrust candle that I can safely put my stop behind? There isn't. You could think about potentially getting in here, off of the 31s that we spoke about, off of the hourly high, but then where are you going to put your stop? If you're putting your stop at 24s, you're just very, very close to this last high at 26s. So in those types of situations where I'm not absolutely certain where I want to get in, I wait for the price action. And in terms of price action, what I'm looking at, especially when I'm trading bunds, is the order flow. So this is what happens as the market comes into the level. It starts to stall here, but it hasn't actually hit the level on the chart yet. Then it hits it there, and it actually closes through it. Now at this point, again, I'm not ready to engage. I'm watching it, but I can see that it is traded off of the last high pre-break. It's traded a tick below, and it's now sitting on that. And then we get the next candle here. Now this is where things got very interesting, because although you've got a second close here below the previous week's VPOC and the previous day's volume value area high, on the footprint, these two candles are these two footprints. And what you'll see in the first candle is that 87 hit the bid, nothing trades the offer, we pull back slightly. On the second test, the sellers get cut off, and that's an unfinished auction. 491 hit the bid, 42 lift the offer, so both sides of the bid and offer trade, and it won't go a tick lower. So then I'm starting to watch the next candle move higher off here, and I then got in. So seeing the order flow at this level made me get in. And where I got in is I got in as it broke the previous candle high. So I actually got in at 30s. This high was 29s. So if I step forward, you'll see this happens. So what I've done at this point is I have got in here just as we break this high, and the entry was 30. And I've put a stop, again, one tick underneath this low. So I had a stop at 24s. And I've put in a target of this low here, which is the last low pre-break of this support. Now, please don't get me wrong, I'm not sitting there staring at the footprint all day. I'm really only ever looking at really key levels where I cannot decide exactly where I want to get in terms of clear last high pre-breaks, last low pre-breaks, and thrust candles for stops. But after seeing price come into this level and seeing that it was beginning to react to it, and seeing that the sellers had cut off, and then still waiting for it to move higher and undo the last 5-minute candle, I was then confident enough to take that trade with a stop underneath that low. Again, not looking for any huge reversal, even though this is a big level, but in and out fairly quickly. And this is what happened. It moved up, it hit my target, it went a hell of a lot higher, and that's absolutely okay. The third trade was a 10 tick winner, the 1.67R, and that was my third and final trade of the day in Bund. So I had one short and two longs. Now, I said that I've had no trades at all today at the beginning of the session, and I want to tell you why, because this is what happens to me. I can go into a day like yesterday and have 3 trades, all winners, and then I come into a day like today and there's quite big price movement and there's no trades at all. And that's because I'm picky and I know exactly what I want to see, where I want to see it, and when I want to see it. When I came in today, I actually came in really bullish, and I'll put this on an hourly chart. And the reason for that was the fact that we had closed, if I really zoom in, above the last low pre-break. Now, if you remember what I've told you, when we have a key last low pre-break on the daily chart or higher on the weekly, and we close through it on that time frame, what often happens is we come back to revisit that price point and then move higher. So what I really wanted to see when we closed up through there yesterday was a bullish move today. The market closed up here, and you might then be thinking, well, if it's closed up here and you're coming into this morning, are you getting long on a pullback into this level from above? And the answer is no, because there's no clear price point to trade from. So I didn't get long this, and instead I actually watched it move all the way down. And I did nothing because essentially I was pretty bullish. Let me bring on my plan from this morning so you can actually see what I wrote. This is the plan from today. So I put, due to the close above the D1 last low pre-break at 34.69, I think we'll see a possible eventual run on the inside week high. So the inside week high was up here. We had an inside week in Bunds, and I'm thinking now that we've taken out that last low pre-break, we'll probably make our way up there. Not all in one go, but that's certainly what I was thinking about. So on my plan, I put that I wanted to see a break and close above 34.79, which was last week's volume value area high, and most likely the key point for the start of the anticipated daily move higher. So when I came in today, again, I've told you that it's likely to pull back to that 69s and then move higher, but I knew that we had the prior week's volume value area high. And if I bring again the weekly TPO chart onto the screen, you can see that there at 79s. I wanted to see it clear that and close above it, and if it did that, then I'd be looking for a long. And when I got to my desk this morning, there was just no close above that level. So if you look at the 5-minute time frame, it's come up there and it just hasn't taken that out. It had a very brief close through it at 7:10, but you've got these range highs, so you really want to see a thrust right through here, clearing the prior week's volume value area high, clearing all the highs of the range, and then get involved. This didn't do that, and then it sold off, and that's why I wasn't interested in it. Now, some people might wonder when they're looking at this, what about this SFP down here? Look at this pullback low, the same price point which you got in yesterday, and look at this beautiful SFP at 9:30. If you were largely bullish on the day, why did you not trade that? Now, yes, if you're bullish and you've got a deep discount and you've got an SFP of a key swing low, then that looks great. But in all honesty, I didn't think this looked at all bullish coming into this level at the time. It's very easy after it's reacted away to look back to the source of it and say, oh yeah, there could have been an entry into that. But looking at the hourly at the time and seeing it come down there, you had this shooting star again testing the previous week's volume value area high on the hourly in the 7 to 8 a.m. candle, can't break the range high, sells off very aggressively, and on the close of this hourly candle, yes, it's SFP'd that low, but that doesn't look to me like a great opportunity to be a buyer. I know it would have worked, but I didn't take that trade because it just didn't look bullish enough to me. However, later in the day, when we saw this move up here, I actually did want to get involved. If you look on the hourly time frame, what you should be able to see is you've got a kind of head and shoulders here. When the right shoulder gets taken out, that's what I call pattern failure. So traders will potentially be trying to sell into this area, and when the right shoulder high gets taken out, it will usually visit the highs to take the stops beyond the head. And if you go back to my plan, I actually wrote in the development box, hourly head and shoulders trap in play on break above 34.61. Why 61? Because that was the high of what I perceived to be the right shoulder. So the plan, and this is again a really important part of my process, starts off bullish, but we don't get a setup, and then we've got a development later in the day that actually now there might be an opportune situation to try and get involved. And as soon as it broke 63s, I went bid here with a stop underneath the thrust candle, looking for a move up to range highs. It didn't pull back. I believed at that point that being a buyer meant you had the market by the balls. But again, it didn't pull back. Some people would wonder why you don't just hit market in a situation like that. I do sometimes hit market. I hit it on this previous trade back here, but I didn't hear. I wanted what I wanted. I didn't get it. It is what it is. That was Bund, and that's why I didn't engage in it today. So let's move on to the swing strategy now. And yesterday I took 2 trades, today I took 1. Let's go over yesterday, of course, first. The first was in the euro dollar, and I think this was a very simple trade. I know a few people on Twitter got it as well. The first thing I want to draw your attention to is this hammer on the weekly chart and where the high of it comes in. Again, I've labelled it KPI, 111.019. Have a look on the hourly. The market sells off very, very aggressively on the negative news flow that was coming out Monday morning. And then we moved down. And again, just so you can see where ATR was on the day, let's take it back for context. And you can see that we've extended past ATR and we're trading into the higher time frame head of the weekly hammer. What do I do in a situation like that? I look for the nearest level to this that's naked that I can trade at. And the point that stood out to me like an absolute sore thumb was, again, the head of the hammer. Did I know that I was going to get a fill down there? No. No idea whether I'm going to get a fill, but I know that if it gets down there, there's a very high probability of a reaction higher. So I framed the trade like this. I came in with a long position here, stop underneath this low, and I put my target of this low here and set the trade up like that. Now, some people ask me, why did I not have a much bigger target of the weekly open? And there's 2 reasons for that. The first was that it was very early on a Monday morning, and all you know is that this is likely to revisit the Sunday open after the Monday close, with the majority of the time it being on a Tuesday. So here you'd be trying to guess how low it's going first. So I chunked it and I figured I'd probably have another entry into a trade back to the weekly open at a later stage. And if I did, great. And if I didn't, that's okay too. And I'm just going to take what I thought would be the easy move. And it moved straight into the high of the hammer, and a short while later it was at target and I was out. Again, it went higher. It went much higher from here. It didn't go back to the weekly open, but it did go higher. And that's okay. I had no FOMO, but I was waiting for the close on Monday because then I would know the probabilities of it revisiting the Sunday open. Remember, those probabilities are only based on the Monday close. Now, your question, Miguel, that weekly hammerhead was tested before. I'm only concerned whether it's tested on the time frame that I see it. If you see it here, it thrusts up and out, and this was the first test that it comes back to on that hourly time frame. So I was aware it was there. I framed the trade like that. It worked, again, pretty nicely. And it ended up being a 1.77R. The next trade on Monday was, of course, the dollar Canadian. And as I said on Twitter, I got bent over quicker than a rapper trying to sign a deal with P. Diddy. It traded straight into the level that I marked out on EFL. Bid was here. Stop was beneath that thrust. Target was this pullback low here. I was only looking for a quick in out and I couldn't even fucking get that. So it traded right down, took me out fairly quickly. Then I had to suffer the indignity of seeing it only go slightly lower before just going absolutely parabolic to my target and beyond. That's okay. The euro-dollar trade earlier in the session had meant that I was up on the day. But nonetheless, despite being up on the day, it's frustrating. There's nothing wrong with being frustrated. It's a perfectly natural human emotion. You just have to make sure you don't take it into the next trade. That's all you've got to work on. I said earlier, what I love, by the way, is when you tweet to say you've had a loser and you get all these cunts fucking sending you screenshots of their wins. You say you've had a loser in dollar Canadian and there's screenshot after screenshot of every fucking man and his dog that's had a winner in dollar Canadian that day. I mean, I get it's competitive, but it seems like a bit of bad form. If someone told me they did their arse in the euro dollar, I wouldn't have dreamt of saying, well, you know, I cleaned up, you daft cunt. But there you go. Anyway, that was dollar Canadian. So then we finally move on to today's trade, which was euro dollar. Now, I've recorded the execution on this for you. It might take a day to get it up because it's fucking 3.5 hours long, so I've got to speed it up and I've got to take out everything going on in the background with me talking to my mum and my mates and all the rest of it. But it was a very interesting trade. Of course, front and centre, we bring on the stats, which you should know by now. So this is going back 5 years, 259 occurrences. Price has tagged the weekly open on 189 of them, giving you over 5 years a 72.97% pass probability of it tagging the weekly open between Tuesday to Friday, with most of the tests occurring on a Tuesday by a long way. So what does that mean? It means that when Monday has closed and you come into Tuesday, you can start looking for returns back to the weekly open. So my plan on euro dollar today looked like this. So this was the news we obviously had. Now again, weekly bias, bullish, I wrote down this morning. Why? Because we're reacting from the head of the hammer on the weekly time frame, and we're reacting higher from there, so it's looking bullish on the weekly. Daily bias, bullish again, because of the return to the weekly open stats. So now we've got two higher time frame biases, the weekly and the daily, giving us bullish conviction. The daily backed up with stats going back at least 5 years. So my expectations for the day, when the day started, was bullish, but I wasn't sure about where I wanted to get in initially. When we moved up here, I then wrote in key levels on the buy side, 111, 11.9, which is the H1 head of the hammer, looking for a return to the weekly open. This is how I set this up. Bid here, stop under that candle, return to the weekly open. What happened? It pulled back near to it and then created another hammer. So at that point, immediately the plan changed, and you'll see in the developments box, hammer formed ahead of hammer originally looking to bid. So basically what I did here is I decided to be a buyer as we broke the high of this hammer, but I didn't put the stop underneath the low on this candle because there's still the chance of a pullback to test the head of this hammer that I'd originally bid. So I put the stop underneath this thrust candle low. Now again, I recorded all of this, so you'll see exactly what I mean, but I'm giving you that context ahead of you watching the recording. So in the recording, what you'll see I do is I'm sitting on the bid at this high with a stop beneath the low and a target of the weekly open. We then get this, and immediately what I do is I move here with a stop entry if we break the hammer high, and I move my stop under that candle, still with the same target in play. Note the R has diminished. That's okay. The R would have been great if I'd put the stop underneath here. It would have been nearly a 3.5 R, but I didn't want to puke into the head of this hammer, so I kept the stop back underneath that thrust candle and ended up with a lower R when the trade took off. So I actually got 1.58 R out of that. It ended up being a good trade, but again, this was a very interesting example of how you have to change the plan on the fly. So I'm glad I recorded it, and I think you'll find it interesting watching it. And again, when you watch the recording, you will see that I've got on one side of the screen my plan, and on the other side of the screen the chart. So I've got the plan first and foremost in front of me, which is always part of my process, and then I'm adapting to what the market is telling me. So I'm originally going bid at this high, stop beneath the low. I'm seeing this price action before. Why am I willing to aggressively pay up? Because I know the high probability of the return to the open. And we've already said we're looking bullish on the weekly. So I'm willing to just pay up there. But again, I don't want to use a stop underneath that candle because nobody's fucking stopping out into the high of a hammer. The only other thing I did on the trade is you see this candle here. On that candle there, I moved the stop up from here, where it was, under the low, to there. Thinking that if it's going to get that close to the weekly open and then come all the way back and make a new low, it's probably all over. And it did pull back, and I actually wondered whether it was going to pull back and test the high of this hammer, but it didn't, and then it was off to target. So I will get the recording of that out so you can watch the execution of it. But yeah, it's been a good week so far. You know, like I said, I'm 3 for 3 in the Bund, 2 for 3 on the swing strategy. The only other thing I wanted to say is in terms of orders I've got in, I've still got the dollar Canadian order above market. I mean, what's the fucking chances of that going up there anytime soon? Not a lot, but that's okay. It's still in. And I'm still prepared to trade BTC, even though I don't have those orders in at the moment. I will put them in. Let me just go to BTC now. So I like that level, but it needs to be past ATR, as I've always said, and now we're coming into the end of day. If we're not past ATR when that level hits, I'm not trading it. So I'm only going to put that order in when I know that we're definitely past ATR. At the moment we would be if it hits tonight, but ATR is going to reset when we move into the next daily candle, and there's every possibility we won't be. So that order might never even go in. So be careful if you're going to put that order in and think that I'm going to have it in as well. It must be beyond ATR. How far beyond it doesn't really matter because I'm only playing for a quick in-out, but it has to be beyond it. I've also marked out an area that I'd like to be a buyer in BTC. I did that when I made my plan this morning. Again, you can see buying a last high pre-break, stop underneath the candle that closed through it, and a target of this pullback low here. So I've got that in mind as well, but that order is not in either yet. Now, just one more addition to make on BTC, which I think is worth talking about. Do you remember we made a plan and we said if price reacted to this area and got above this level that we'd look for a long? And again, just to let you know how plans change and update, if you look at my plan for BTC here, you can see that I originally planned to watch price and look for a bullish reaction from 61,373 with price needing to close above 61,849 to take a long position. But the close proximity of Friday's low, this level here in blue, which is now the FTA at 62,340, means this will be unlikely to offer a decent return on risk. Still worth watching, but unlikely to offer a good trade anymore. So again, that plan is always developing. By the way, when you're creating your plan, if you're using the same template as me, what I've done here for ease of use is I've color coded the tabs. So if they're white, it means that I've got nothing of interest to do in that market. When I filled in my plan for this morning, for example, in Euro GBP, look at this. Weekly neutral, daily neutral, expectations none. Nothing on the buy side, nothing on the sell side. But when I'm looking at the other markets, if there's something I want to do on the buy side, I color code it blue. If there's something I want to do on the sell side, I color code it red. And if I color code it orange, it means there's something I'm looking to do possibly on the buy and sell side. It's just a quick way of drawing my focus to where I need to be. Otherwise, you've got, a million tabs and you're flipping between a million plans. Because as I've said before, there's usually going to be a focus on the day, or several things you need to focus on. So the last thing I would say is cable. I have an order in to sell cable. Will it stay in tomorrow? We'll have to see where we are in relation to ATR. But if you have a look at the weekly, you'll see the weekly last low pre-break. On the daily, if you go back to that level, you can see it pretty clearly here. And if you come down to the hourly and we scroll back to it, you'll see exactly what I'm trying to do here. Let's just zoom in. When we broke here, see how we paused with this shooting star, then broke. Now the low of that shooting star was not tested on the high of this candle. It may look like it does, but it doesn't. It's very, very close, but as long as it is technically naked, I'm willing to trade it, and I'm going to come in at the low of that shooting star, which is just a fraction beyond the weekly last low pre-break. Stop above the high, and a target so far of these range highs. Remember, targets can always change, but that is how that is set up. And again, I want that to be past ATR. So that was another trade that I put into the plan from today. On the cable tab here, you can see weekly bias neutral, daily bias neutral, no real expectations, but I've got a reaction point, 34,952, past ATR into a weekly last low pre-break. So I look for a mean reversion trade when markets go past ATR. It's just something that I've used for quite some time. Regarding the ES, that's a very interesting point. Someone just mentioned, oh, ES is at all-time highs, and you've got that down in red as a potential sell, have you? Yes, I had. Let me explain what happened here, and then I'm going to call it a night. If you have a look, what I've written down here when I came into the S&P this morning, bearish SFP on the weekly time frame. So there's your bearish SFP. This is the December contract. So it looks a little bit bearish there. On the daily time frame, we've got inside day failure, bearish inside day failure. Now I did write down in my plan bearish inside day failure, although technically negated. What that means is in the current session we've traded above the high of the inside day failure. That doesn't mean that I'm not going to trade it at all. It's just a point of reference that I've got in the back of my head. I would prefer it if we didn't take out the high of the inside day failure and traded immediately lower. But it's not completely negated for me until it closes above the high. So my expectations for the day were lower. Okay, well I fucking got that wrong, haven't I? Because it's gone higher. But what was I looking to do? Sell on a clean break and rounded retest of the KPI at 5778.25 and target the IDF. So what do I mean by that? The IDF is here. So that would mean, if we failed at the inside day high, which we have here, we would go to the other side of the inside day. So that was the target. And I was saying that sell on a clean break and rounded retest of the KPI at 57728. Where the fuck is 57728? It's that candle there. That candle low. Now why that? Because basically we've moved up into this level, and I'm now looking to see if we can get some momentum back down through this prior resistance. Some sharp momentum. See it trend to the downside and then get in on a rounded retest of that 57728. What happened is we got this candle, which was not a clean break, and it was a close above. have a look at my developments box. The KPI has moved lower to 5769.25. Look for a clean break and rounded retest of that for a short. And if you draw that low, you'll see it's 5769.25. So clean break and rounded retest of that for a short doesn't happen. And then we're back up here and there's no trade. So again, in terms of this plan, this is how I've come in thinking, this looks pretty bearish and I expect this to go lower, and there's been no trade because price hasn't given me what I want to see. So I've got to have a thesis and then price has got to confirm it. So I'm going to leave it there for tonight, ledges. How can you get access to the NIM HFX ATR? Go to indicators and type it in and then put it on. There. That's how you get access to it. I will see you tomorrow night and we'll crack on from there. Cheers, guys.